We are back and we're reviewing more traders here at Atmos, and in today's video we've got a good example of someone who tested their skills first, and when they proved they had what it took, they scaled up, and someone who learned from their lesson, breached first, then came back strong. So let's get into it. So in this first example, we have someone who opened up a $5,000 phase one account. Let's have a look at their equity curve first of all. The first thing I notice is this person got dangerously close to their take profit twice and then ended up being all the way in drawdown. So what I mean by that, March the 19th up here, $45 away, $55 away from passing the profit target. And then their profit went all the way down. They ended up being back to where they started at 5,000. Again, up here on April the 21st, what's that? $40 away from the take profit target of 5,500, all the way down into break even. As a trader, that can be really mentally damaging to get so close and then the account falls. The thing that concerns me a little bit is the steepness of the equity curve as it falls from when they got really, really close. Because that tells me that this person potentially lost their head a little bit and was rapidly trying to make it back when they got so close. So it's important that even when you get close to your take profit target on the prop firm, is to still follow your same plan. Now, this trader from March the 12th till May the 10th. So a lot of trading examples here. So that he would have got a really, really good amount of data from his trades. So obviously I can't go through all of them, but typically, as you can see, when I click through the trades, the one thing I notice, it's pretty much on gold. There was actually two examples where this person didn't trade on gold and it was a loss. And then back here on euro dollar, again, held the trade for 10 seconds. So a massive gold trader. Trades won 36, trade lost 41. Now you're probably thinking, well, this person's lost more trades than he's won. There's nothing wrong with that at all. My win rate on my trades is something like 0.4, 0.35%. I lose maybe 2 or 3 trades in a row before winning the next one on average. So this person is 5 trades more lost than they have won. Past phase one. Okay, so into phase two. This time a lot more consistent on the equity curve. Do you remember before on phase one where it was up and down, up and down? It looked like a gold 1 minute chart. This time, this trader was in a little bit more drawdown, but then recovered well. And when they got near their profit target, look, we didn't have that steep drop off. It was just more consistent. It was more flat and went on that nice grind to the upside. When I look at a prop firm equity curve on someone's trades, this is the sort of thing I like to see. I don't want to see just straight up to the moon. I don't want to see obviously straight down. I want to see something that's nice and steady, and this is a great example of that. Didn't take nowhere near as long to pass. 8 trades won, 5 trades lost. Again, as you can see, gold trader. What I notice more than anything about this trader, obviously then as we move into their 5,000 live account, currently $500 in profit as well. And that equity curve, that is beautiful. So we've got some pullbacks, but steady, healthy pullbacks. No one is just going to keep going. Everyone experiences losses, but that is probably the perfect example of an equity curve. And this is on the live account as well. 8 trades won, 4 trades lost. Has been trading since from June the 9th up till June the 19th. So this trade is doing really, really well. The lot size, consistent. Even though it's on the live account, again, when we get to live accounts, people can trade differently. This person hasn't done that. Trading with a consistent 0.05 lot size, which obviously on a smaller account. But here's what I like the most. After testing the 5,000, past phase one, past phase two, onto the live, they then scaled up to a 50,000 account. Here's phase one. Again, that equity curve, very, very consistent, been consistent throughout all of the videos we sent. A lot different to that first phase of the 5,000 account. 4 trades won and 1 trade lost. So the lot size here, consistent, 1 lot size. Had some really, really nice trades here as well. Look, 3397, profit of $2,000 on that trade, $2,000 on this trade as well. This person must have caught, and this can happen sometimes, 14 minutes it took for this trader to make $2,000, but also took 5 hours for this trader to make the same amount just a few days later. This is an example of knowing your economic calendars. Although I can't tell from here exactly when a news event has come out, I'm pretty confident that in this time there was a period of higher volatility. That's why they made such a big amount in a small space of time, which means they maybe were trading some fundamentals. Knowing when the fundamentals are coming out, knowing when the most active times are in the market could save or break your trading career from a prop firm perspective. What I genuinely suggest to people is that even if you're not a fundamental trader, so if you're watching this this and you're just a technical trader, at least have an understanding of when the high impact news events are coming out, because then you're going to know when the most volatility is. Some people like to, if their strategy needs volatility, then you should be trading around those times. But if your strategy is something that doesn't really perform as well during higher periods of volatility, then you know to avoid those times. The best way to do this, by the way, just as a quick tip, is when you backtest your strategy or even forward test your strategy, marry it up with the VIX. The VIX is the volatility index. You can see your performance or your profit during times when the volatility index goes up. So if your profit is going down in times where the VIX is going up, that basically means in times of higher volatility, you need to hold back from your strategy a little bit. So this person has now tested what they know from the 5,000 and decided to scale up to the 50,000, past stage 1, and is currently on the way to passing stage 2 as well. Obviously only a small sample of trades here, 1 trade won and 1 trade lost, because he's only really just started it 3 days ago. But the main lesson that I wanted to say from here is test things first on a small account if you're not sure. When you see that's working, that's the time to go in. Don't go all in at the start and put loads of pressure on yourself, because you're going to end up not trading the way that is the best version of yourself. Test it first. When you're confident of your edge, confident of your strategy, then you can start to scale up. Okay, so now we move on to an example of a trader that failed at first, but then has come back strong. So this trader, status breach, is a 100,000 account, phase 1, and you can see from the balance curve, never really got going, to be honest, and 2 trades won and 6 trades lost isn't really the best outcome. Now, that might be that his strategy just didn't work in that particular time. So when I looked through this person's account, I noticed that he was trading dollar yen, AED USD, trading pretty much FX, right? You can see that. No gold trading, no stock market trading, just pure FX. Fairly consistent on the lot size. Maybe he was testing a strategy on these Forex pairs. Didn't work out for him. Came back and bought another account. Again, 100,000, phase 1. Passed it. So I said to myself, what was the difference there? Obviously, 6 trades won and 2 trades lost, completely reversed from the other time. But what I noticed was the pairs changed. He started trading euro dollar and gold only. So he brought gold into his trading, and euro dollar is typically seen as one of the most stable currencies as well. And he moved away from those currencies. I wouldn't say they're minor currencies because dollar pairs are major currencies, but things like AED, USD can be a bit more tricky to gauge than something like euro dollar. And that's typically because euro dollar is the most liquid pair in the financial market. So it's just a good one to pick if you're looking for a dollar pair. So maybe this trader has decided that, look, my strategy isn't working on AED, USD and these other Forex pairs, and I'm going to utilize my strategy on something else, and it's worked out for him. So that's an example of, you know, when something isn't working quite clearly, because that account never really got off the ground, did it? That other one. Whereas this one is the pretty much complete opposite. Yes, there was some drawdown as expected, but after that was on a steady rise. If something isn't working, tweak things and change it. You don't necessarily need to change your whole strategy, but you can change the pairs that you're targeting. Start to become a specialist in a particular pair. I don't really care what it is. When I speak to traders who come and ask me for help and they say, what market should I trade? I say, what market do you like? Because I don't care if this trader just trades gold or if this trader just trades Bitcoin. The main thing for me is that they feel comfortable on that pair and they feel confident in it. This trader in this example clearly wasn't really doing anything good on the AED USD or those Forex pairs, those other dollar pairs. But as soon as he switched to gold, that's when he made a lot of his profits, and euro dollar. So then he passed phase 1 and into phase 2, which is currently active. Didn't place a trade for a good 4 days. I don't mind that, by the way. Just because your account starts doesn't mean you have to trade on that particular day. This person's obviously waiting for their setups, which is one of the most important things that you can do, is exercise patience, particularly in prop firms when you've obviously got that 10% buffer to lose before your account gets shut down. So he took 4 days to place a trade, and when I scroll down, one thing I notice, gold, euro dollar again. So he's doubling down on that approach, and that's another lesson or tip. When something's working, double down on it. If you know it's working, if you've got data to prove it's working, double down on it straight away. It's the same like if you was in a trade. People always say you need to add to your winning trades and cut your losers short. Obviously it's easier said than done, but the theory is correct. When something is working, we go in on it hard, and when something isn't working, we change it or we tweak it. I don't like to use the word change because I don't like it when people change the whole entire system when maybe just one thing is wrong. So yeah, this trader pretty much came from the dead. Started out with a 100k account, wasn't going his way, tweaked some things, moved into a different pair. I know it's gold and a lot of people trade gold, but moved into a pair he was obviously more comfortable with, and now is reaping the rewards of that. Okay, so there were some examples there of how to do things properly when it comes down to prop trading. If you're feeling confident in your strategy and confident in your edge, come and join us at atmosfunded.com, and I'll see you on the next video.